This is the Demystifying Crypto and Building Wealth podcast.
I knew that would be worth trillions.
That had never existed in human history. There's been massive opportunities.
The #1 podcast to help you understand and get insights into the crypto world, blockchain technology, wealth building, and financial investing. Now, here's your host, Tico Tawari, the world's #1 most trusted cryptocurrency analyst and Wall Street veteran with decades of experience in the financial space.
Hello, everyone. It is a pleasure to be back with you here today. Traveling today, so going to keep today's commentary relatively brief and really just talk about what's going on with the price action in crypto in general, and especially as how Bitcoin is trading relative to American equities right now. We saw this big sell-off in global equities as this yen carry trade started to unwind and all assets, took a bath. But we've seen this big comeback in the S&P 500, but we have not yet seen that follow through in Bitcoin and in crypto assets in general. So I want to talk a little bit about that today and give you some perspective on that. Well, let's just say a couple of hellos to everybody that started to join here. Hello, hello. Hello to Canada. Who do we have here? Chelsea, Crypto Kathy. That's a great name. What else do we have? Glenn from Canada. Hey, Glenn. Good morning. Pasha, how are you? Okay. Hello from California. All right, and Scotland. All right, super. Okay, so let's kick things off here. So when you see this action in stocks and over the short term, stocks outperforming Bitcoin, it's easy to draw long-term conclusions from short-term data, and that happens all the time, especially around assets that are volatile. And so I want you to keep in mind some of the best performing stocks of the last 20 years. So these are companies like Tesla, Google, Facebook, Microsoft, Apple, and these companies put their shareholders through intense emotional ups and downs. There were periods in Tesla's history where Tesla essentially traded sideways for more than 3 years before going up more than 10x. You had periods of massive volatility just in Facebook over the last 18 months. I mean, Facebook dropped, I think, 60 or 70%. It was a huge drop lower, much more volatile than Bitcoin, and is now up several 100% from the lows. So the key thing is that you have to understand what the macro driver is behind the long-term idea that you're invested in. And then you also have to understand short-term headwinds that can hit that idea. And an important skill to develop is understanding the difference between a short-term headwind and a long-term change in the viability of that asset. And so simply because we're wired to be afraid, it's not it's just part of our DNA. We have a tendency to over-index on either bad news or on a short-term headwind. We are wired to just perceive that short-term headwind is going to last forever. So we saw that, a prime example of that was in the S&P 500. S&P 500 just got walloped when this yen trade was unwound. And, I looked at that and I said, okay, has something fundamentally shifted with regards to the companies in the S&P 500? And I said, absolutely not. So this is a short-term headwind. I actually use that as a buying opportunity in the S&P 500, and here we are on the way back. So what does that have to do with Bitcoin? Well, Bitcoin right now is dealing with a few short-term headwinds that unfortunately some people are extrapolating those headwinds and believe that they will last forever. So what I want to talk about is, what are the key headwinds that Bitcoin is dealing with? Well, I actually have written an article about this. It'll publish in about 5 or 10 minutes on tawariresearchgroup.com. It's tawariresearchgroup.com, and you can read the article that I wrote. It's called From Itchy Hands to Diamond Hands. Here's what's next for Bitcoin. So Bitcoin hits a high of around 74K in March of this year, and then has spent the last 5 months grinding lower. So we've had a few things hitting Bitcoin. We've had the German government just sell $3 billion worth of Bitcoin with absolutely no regard to the price that they got for it. From what I can tell, there was no reaching out to private people or to trade desks. They just sent it to exchanges and just started hitting the bid, which was not smart for them or for the German people, because they could have got a much better price if they had taken some care in how they sold that Bitcoin. We then had the U.S. government has shipped about $1 billion worth of Bitcoin to exchange wallets, so we know that some of that Bitcoin has already been sold and some of it will continue to be sold. But the biggest psychological overhang, at least, has been the more than $8 billion worth of Mount Gox claims that have been paid out. So you've got to think about this logically. If you are a large allocator of capital, or you are a hedge fund, or just even a very big wealth manager, and you want to add Bitcoin exposure, and you know that all of this overhang is out there, are you an aggressive buyer or are you a more cautious buyer? Do you let those sellers come to you, or do you run into that wall of selling? Well, it's self-evident, right? You pull your bid back and you let those itchy sellers sell to you, especially when you're dealing with governments, because they just are price insensitive. They're not traders. They just dump. And then with the Mount Gox holders, some of these people are up 500x over the last 10 years. So it's only natural that some of them are going to want to take some profits. So that, I believe, is the reason why the recovery in Bitcoin's price has been slower, because there's been no need to be an aggressive buyer when you know there is that much overhang out there. Now, here's the good news. Eventually, that overhang will be removed. It's not forever, and the market will work through that Bitcoin. And so the thing that you want to focus on are the long-term drivers of Bitcoin's adoption. And a key distinction I want to make here is when I speak about adoption of Bitcoin now, I'm not talking so much about the usage of Bitcoin being used in transactions or even more Bitcoin wallets being used and produced. When I talk about adoption now, I'm talking about the adoption of Bitcoin by traditional Wall Street firms as a bona fide traditional asset. Of course, it's a non-traditional asset. I believe it will transform itself into a traditional asset over time, that it will be as ubiquitous in people's portfolios as the S&P 500 is right now. Now, why do I believe that? Well, we've talked about the scarcity of Bitcoin. We've talked about the security of Bitcoin. We've talked about the fact that I call this the decade of debasement, that we are going to see untold numbers of continued years of deficit spending, which is going to devalue the value of the dollar, the buying power of the dollar, which is going to force more and more people into Bitcoin. But the other piece is Wall Street greed. Wall Street is driven by one thing, the generation of fees. That's it. And by making markets in Bitcoin, by offering Bitcoin products, they can generate fees at a level that they can't generate from their current business. So I said this as early, I think, as 2017 or 2018. I put my faith in Wall Street greed. I was speaking about, even back then, in the early days, for me, in 2018, that Wall Street would have to come into this asset. And what would drive them into this asset was the amount of fees that they'd be able to generate. So we saw many Wall Street firms say, no, we'll never touch Bitcoin. but I want to bring your attention to where we are right now. So since the launch of Bitcoin ETFs, by the way, Larry Fink in 2017 literally said that Bitcoin was nothing more than an index on money laundering, and now is the biggest Bitcoin bull on Wall Street. Since launching the Bitcoin ETFs in January, we've seen $50 billion in fund flows into those ETFs. Now, $50 billion, a lot of money. Let's put it in perspective. It took 5 years for the gold ETFs to hit $50 billion in AUM. We've done it in about 7 months. Think about that. And we've just started that adoption cycle. On April 2nd, the head of Goldman Sachs Wealth Management Group said, our clients aren't interested in Bitcoin. We don't see it as an investable asset. Well, the most recent SEC filings came out and they showed that Goldman now owns $400 million worth of Bitcoin, ostensibly on the part of their customers. So clearly, their customers do have an appetite for Bitcoin. And then on August 19th, Franklin Templeton, the $1.3 trillion money manager, came out and said that we are filing for a crypto index. So it's an index fund like the S&P 500, except it will have Bitcoin and Ethereum in it. Again, making it easier for the general public to get involved in this space. But I think the biggest news, and the news that is really none of this news is priced into the price of Bitcoin, is that on April 7th, Morgan Stanley, which has among the largest wealth management groups in the world, they have 15,000 wealth managers, they gave their wealth managers the green light to start recommending Bitcoin. So you have to ask yourself, will the rest of Wall Street, who has not yet agreed to allow their wealth managers to recommend Bitcoin, are they going to give up the entire digital asset market to Morgan Stanley? I don't think they will. I don't think they will. So my point is that we are at the very beginning of the Wall Street adoption cycle. And Wall Street are the shepherds of the largest pools of capital in the world. Period. Period. End of discussion. So our job here is not so much to know the exact date when the next parabolic move in Bitcoin is going to occur, and by extension of that, the rest of crypto. Our job is simply to put ourselves in front of this massive new wave of adoption that is coming to this asset class. And to give you an idea of how early we are, if we look at the amount of money that's been allocated by Wall Street to Bitcoin, and we'll use the amount of money that's in ETFs, which is $50 billion, that's only about 0.25% of global assets under management. To put that in perspective, about 19%, 18 to 19% of all assets under management are currently indexed to the Dow and the S&P 500. Bitcoin is at 0.25%. So you have to ask yourself, are we early or are we late? Well, we're clearly very early, right? There's only a 0.25% global allocation to Bitcoin from global AUM. So if we just go to a 5% allocation, Bitcoin goes to $368,000. If we match the allocation that we see right now in the S&P 500 and the Dow Jones, we go to around $968,000 Bitcoin. So the runway ahead of us is so much larger. And the mistake that many investors make is that we get so focused on when, rather than on the inevitability of that asset going up dramatically in price. So, I can have an idea of when I think something will move higher, but I can't definitively know. When I recommended Apple back in 2003, I knew Apple would go higher, but I couldn't tell you definitively when. It's the same thing when I recommended NVIDIA back in 2015. the report that I wrote, I said NVIDIA is going to become one of the most valuable companies in the world, and it's because of AI. Now, for me, the decision-making process was easy. Okay, these guys are dominating machine learning. Machine learning is the future. That's what AI is going to be built upon. I didn't know the exact day that that value was going to be realized, but I didn't need to. All I needed to know was that value was going to be realized at a certain point, and not 40 years in the future, but at a certain point that would make sense, that my readers would still be able to enjoy the profits from it. And so I have found that I have much greater success in my investments if I spend more time focusing on the inevitability of an investment working out, getting the understanding of how that investment's going to unfold over time, than trying to figure out the exact day when it's going to have that parabolic move. I went through the same thing with Tesla. I recommended Tesla in 2019 and talked about EV adoption and talked about what they were doing with AI. And I said, look, it's going to be volatile, but you're going to see a massive move higher. Well, right after I recommended it, it dropped 40%. And I said, it's going to be volatile. But the year after, it went up, I think, almost 10x, maybe 8x, had this huge move up. So again, I've said it again and again, volatility is the price that you pay if you want to own something that can have a massive life-changing move. And the way that you deal with the volatility is through your position size and through understanding the long-term driver of the asset. If you understand the long-term driver of the asset, if you are position sized in such a way where it doesn't affect your day-to-day life, no matter how volatile it is, you put yourself in a position to really make life-changing wealth. But you have to have those two things in place. You have to understand the long-term trend, so you have the confidence to deal with the volatility, and then you have to have the correct position sizing so the volatility doesn't make you do something silly like selling at the low and buying at the high. Any questions about that? Okay, is it true there's not much Bitcoin left, especially after Trump's speech? Well, I'm not sure exactly what you mean in terms of how much the government still has. I mean, the government still has a lot. Would IBIT be a long-term hold, or do you think it will be manipulated? I don't know how you could manipulate IBIT, because you'd have to try to manipulate the entire Bitcoin market, and it's over $1 trillion large now, so that would be difficult. I personally like IBIT. I think it's a great way to hold Bitcoin if you don't want to hold it personally. And the fact that you can put it in a brokerage account is great, but not just IBIT. There are a lot of other ETFs that you can choose from. Well, I think that's it. When will the next bull run be? Well, we're in it, right? The bull run has started. If you look back to 2020 and 2021, or you look back at 2016 and 2017, these consolidation periods that we see are quite normal. I remember in 2016, we had multiple 20% and 30% pullbacks on the way up. And in 2020, we had these long periods of sideways action before Bitcoin took off again. What's been really encouraging about this particular cycle is that we actually hit a new high before the halving, and that hasn't happened before. So, we hit that new high, and now we're consolidating. So the question here is, Tika, I'm worried about alts because they correct every time Bitcoin drops. What are your thoughts? Yes, remember that the alts are always going to be magnified. So when Bitcoin runs, they magnify on the way up. When Bitcoin drops, they magnify on the way down. What you have to ask yourself is where am I in the bull cycle? And the answer to that is we're quite early, because the halving was just in April. So what is it? March, April, May, June, July, August. It's just 4 months ago. So generally, the closer you are to the halving, 4 months before, 4 months after, we would consider that very early cycle. So we are taking advantage of these low prices. I've been putting out buy alerts during this period of time when Bitcoin is down, because the alts just get absolutely massacred. But that's a feature, not a bug. If you're early in the cycle and Bitcoin's getting whacked and the altcoins are getting whacked, well, you use that to your advantage. You buy the altcoins. Of course, remember, altcoins can go to zero, so you have to use small position sizing and uniform position sizing, and then you position yourself for when Bitcoin does have its big move. I believe Bitcoin will run to at least 150K during the balance of this bull market. And if that's accurate, then altcoins will, they'll just have monstrous moves higher, in my opinion. Question is, do you think we'd hit a recession? If yes, would it impact crypto in a good or bad way? Well, we're going to hit a recession eventually. That's part of living in a capitalist society. You have to deal with recessions. Do I think we'll hit a recession this year? No. Next year? I think it's unlikely. No matter who wins the election, I think there's going to be a ton of government spending. And if you have a ton of government spending, it's hard to have a recession. How will it impact crypto? That remains to be seen. I think we need to look back at the last time we had a recession, which was the COVID crisis, and you saw all risk assets get hit, and then you saw the policy response was massive stimulus, which was very, very bullish for Bitcoin and for stocks, and then Bitcoin started running. So I would imagine that when we do have a recession, everything will get hit. Stock prices, real estate prices, crypto prices. And then we will have to see what the policy response will be. And since we only know one way of dealing with recessions, which is cheap money and government spending, well, that debases the value of the U.S. dollar, and anything that debases the value of the U.S. dollar is incredibly bullish for Bitcoin. And so what I would imagine you would see is the knee-jerk reaction of Bitcoin prices going down. You would then see the knee-jerk reaction of a massive policy response, and then you would start seeing Bitcoin skyrocket once again. Question here is, heard that September is bad for cryptos and stocks. Is that true? Look, flip a coin. It can be, and sometimes it can be great. A lot of it has to do with tax loss selling. So sometimes you can get some pretty extensive tax loss selling during that period of time, but it remains to be seen. Okay, I have a question on altcoins. Yeah, I think there will be some altcoins that see some absolutely massive moves. I think that we are just at the very beginning of Wall Street waking up to this asset. And, Wall Street can sometimes be slow to adopt an asset, but once they really get behind it, they can move a mountain of money into it. If we think back, for those of you that were around in the 90s, during the early days of the internet stocks, institutions would look down their nose at internet stocks. They didn't think that they had any value at all. And the big early profits in internet stocks were made from individuals. They weren't made by institutions. And then when Netscape came out and had that massive one-day rally, that just woke up Wall Street to the power, the profit in the sense of how much profits they can make from doing underwriting of tech stocks. And they threw $5 trillion at tech stocks in the late 90s, which was a lot of money back then. And we had a massive bull market. So I think we'll see something like that take place. But in crypto, as they start rolling out more and more financial products, ETFs, ETPs, options trading, things of that nature that get built around this ecosystem. Yeah, so this is a really fantastic question. Why doesn't some forward-thinking nation state turn on the money printers and buy 1 million Bitcoin and start a run on the sats? So this is something that President Trump has talked about doing. Should he get elected president and actually do that, that will set off a global race to acquire Bitcoin, because you couldn't just sit there and let one country run their printer in order to buy the most secure, the most scarce, immutable asset that man has ever created. Game theory would kick in, and every other country would have to start building their stack. So, when I look at, they talk about black swans, right? I don't know if they would call this a white swan, but that's kind of like a black swan event to the upside of Bitcoin, where if an OECD country, a major country, came out and said, we're adding Bitcoin to our national reserves, right, and they're printing money in order to do it, would be an absolute game changer. We would see Bitcoin leap higher overnight. Question is, how important is having the right mental framework to navigate the bull market? It's everything. So I've had readers over the years that have made a lot of money from my work, and then readers that haven't, which I never understood until I really, really figured out that they just didn't have the mental framework. So what they were doing was they were over-concentrating on certain positions, which I've always told them not to. Always put the same amount of money into each idea, keep it uniform, and use a small amount. And then when we would have times where we'd have extreme volatility, they would sell at the bottom, and then when we'd rally, they'd buy at the top. And so they were never able to capture the gains, or they would ignore my buy recommendation, and then they would buy when they wanted to buy, and then sell when they wanted to sell, and then blame me for it not working out. So here's the thing, crypto is highly volatile. There will be times when everything you own is down 80%. It's just the nature of the asset. And so once you come to terms with that it is highly volatile, and then you put that next piece in, which is uniform position sizes, small position sizes, treating the portfolio like it's a venture capital portfolio, that's when you put yourself in a position to experience truly massive gains that can absolutely change your life. And along the way, you're going to have some that go to zero. It's going to happen. It's happened to us a few times. So I'm always very clear about that. We're at the highest risk end of speculative investing. But again, so long as you mitigate that risk with your position size and your overall allocation relative to your safe investments, there's no reason why you can't play in this pool and do very, very, very well. But to answer your question, yes. I would say your mental framework is going to determine really just about every piece of the quality of your life, from the amount of money you make to the quality of your relationships with your spouse, with your children, with the people that you work with the quality of work that you do. It's all about the mental frame that you hold. Okay. Let's have a look. All right, I think that is it. All right, friends, I want to thank you so much for tuning in. Again, I have an article that talks about all of this. It should have published by now. It's on TawariResearchGroup.com. It's called From Itchy Hands to Diamond Hands. Here's what's next for Bitcoin. All right, friends, thanks so much. I want to thank you so much for being here and for everything you do. And as I always like to say, I want you to always remember, let the game come to you.
So that concludes today's episode. Thank you for listening. We'd love to hear your thoughts in the comments section. You can find the show notes on www.tikatiwari.com. If you found this episode helpful, please share it with others, talk about it on social media, and leave a rating and review. Don't forget to subscribe so that you never miss another episode. Thanks again, and we'll see you next time.